We have a special guest joining us. Ashok Wadhwa is Group CEO of Ambit Private Limited, and he's with us right now on the top of the show. Mr. Wadhwa, it's a pleasure. Thank you very much for your time. First up, let me wish everyone at your end a very happy 2017 from all of us here at CNBC TV 18. Mr. Wadhwa, how are we placed in terms of the economy and stock market levels at an aggregate level? Are things starting to get better, or it's just, the start of the year kind of cheer where everyone weighs in and says, well, this year can't be worse than the last year. Is it possible that we are yet to see the bottom, both in economy-wise and market-wise?
Well, let's start with the economy first. Clearly, we are still suffering from the aftershock of the demonetization policy. And, anybody who thought that such an important and transformational change can happen without some element of pain and perhaps sustained pain, wasn't bargaining right at all. What we are going through now is a natural outcome, as I said, of a transformational policy, perhaps most transformational since independence in India. And what that has done is it has really reduced the one engine, the firepower of one engine, the consumption engine that was really propelling the Indian economy at this point of time. The effect of this important policy change is not just a 2-month change or a 3-month change on demand. We still have to see how sustained the kind of dilution in demand is. Very clearly, we were already operating with the investment cycle, not yet fully picking up. People still not in a mood to make capex. People still not in a mood to increase capacity. Now, with that backdrop, as I said, the one engine that was firing has a diluted effect, which obviously means that the economy is suffering from that shock, shall continue suffering from that shock for a period of time. It is anybody's guess whether that dilution will continue to operate for a 3-month period, 6-month period. Our analysts believe that it could be as much as a 15 to 18-month period. But one thing is certain, that the investment cycle is not coming back. Private sector investment is still not being conceived or considered, which effectively means that a lot of burden for capital expenditure will fall on the government, and we'll have to see what the budget does. Now, with that background, clearly, corporate earnings are going to be diluted, corporate earnings are going to be disappointing, and therefore, if you reflect that on the market at this point of time, perhaps the market is correctly reflecting that dilution in corporate earnings. My own view is that we don't necessarily have to be pessimistic on the markets at this point of time, but we have to be certainly cautious. If somebody was to ask me and say, has the market bottomed out, I would certainly say that there is going to be 1 or 2 other opportunities, perhaps soon, when you will see further dips in the market. But, listen, nobody's going to be able to time the market perfectly. And therefore, if people said, is this a good environment to start considering buying and getting back to the market? I would say it's the start of a good environment, and perhaps some of the early buying of 2017 reflects that any which way.
Okay. Mr. Wadhwa, it sounds as though you're much more cautious than optimistic, because in one of your previous interviews, you did mention that you're cautiously optimistic. But now, is the caution overweighing the optimism for 2017? Is that how we should read it?
I would say that, clearly now and perhaps for the first quarter, perhaps for the first half of 17, we need to continue to be cautious. Having said that, I remain optimistic both on the market and the Indian economy in the medium to long term. I think the positive impact of what the Prime Minister and the government has done over a medium to long term cannot be underestimated at all. And once we go through this painful period, I think there is every reason to be significantly optimistic. What that turning point is, whether the turning point will be at the end of the first quarter of 17 or the first half of 17 calendar year, one still doesn't know what the right timing could be.
Right. Mr. Wadhwa, Saurabh Mukherjee from your team for about 2 years now has been talking about a reset which Mr. Modi is going to effect. I mean, actually more than 2 years now. And I guess what has happened in terms of the crackdown on black money is one of them. But I just want to understand from you, what is, when we say that it is the positive impact of it over a medium to long term, will be felt. What is that period we're looking at by when the effects will start to show? And what exactly are those benefits that we will see?
You know, in a lighter vein, actually, to begin with, Asia Money polls results have come out recently. And as you may have seen, Ambit has been voted as the most independent broker, second time in a row. And we've also been voted as the most improved broker, fourth year in a row. And therefore, the point I'm trying to emphasize is that Saurabh, and the research team are fully entitled to and have a right to have their view. And as an organization, we certainly give them complete liberty and freedom to state what they believe is the right outcome based on the work that they do. But on a more serious note, honestly, as I said, nobody can define how long the painful period will continue. The government machinery has been talking about it being a 3-month period. Many market participants talk about it being a 6 to 9 month period. I know that my research team talks about it being up to a 12-month period. But honestly, when you look at a long term, a 5 or 10-year horizon, it's really irrelevant whether it's a 3-month period, a 6-month period, or a 9-month period. I think there is consensus on the fact that through this painful period, there will be dilution in corporate earnings. There will be an
Mr. Wadhwa, if I can just
GDP.
Mr. Wadhwa, if I can just, sorry to interrupt you. So let's assume it is 12 months, right? Or maybe let's just assume it is 15 months, the painful period. My question is, post that period, what are the changes for the better that we will see because of what has been done?
I think, if you look at the two important statistics, 24 lakh people in this country report an income of $15,000. And 12,000 people in this country report an income of $150,000. I mean, something significant needed to be happening. And I think the reset that the Prime Minister has pressed is really to attack that part of our economy that is earning income but really not reporting income. My own view is that there are some significant positive outcomes once this whole sustained attack starts showing positive results. One, clearly there'll be a significant amount of money that will go into the banking system, and therefore financial intermediation becomes a very important positive growth phase from there onwards. Second, I think once bank gets a significantly larger supply of money coming through it, I think we have reasons to believe that long-term interest rates will drop. Cost of capital in this country will drop. And we have to be competitive on a cost of capital if made in India has to be a serious and successful dream for us. Third, our tax to GDP ratio is appalling at 11 to 12%. It needs to move to 20%. And I'd like to believe that the reset that the Prime Minister has set will actually help us achieve that over a longish period of time. And once we get to those numbers, we are in a significantly better fiscal position, and we are in a significantly better monetary position, I would like to believe.
Okay, fair enough. Mr. Wadhwa, that point is taken. We need to take a mandatory break at this point, but just stay with us because we're going to continue this conversation just after a short break. Well, high point of the day for the Nifty, so 8205 is currently where we're at. We have the Bank Nifty as well as the mid-cap index, which is at the high point of the day, and we have the advanced decline ratio, which is in positive terrain as well. Let's continue our conversation with Mr. Ashok Wadhwa then. Mr. Wadhwa, what exactly is your expectation from the budget this time round? Because there is a fear, an underlying fear in the market that maybe it could be a little more populist in nature, simply to assuage a little bit of the pain that we've seen post-demonetization. Your sense in terms of what the Prime Minister announced on the 31st, and if you could extrapolate it to the budget?
I mean, perhaps some of the more populist measures have already been announced by the Prime Minister. Having said that, if there are some more populist measures in the budget, I don't think it's to be disappointed with or to be frowned upon. I mean, the government has taken it upon its agenda that it wishes to build a country and an economy that is a little more egalitarian than we've seen so far. Having said that, I continue to be positively inclined towards what I think will be the contents in this budget. I think there will be a lot of focus and attention on planned government expenditure on infrastructure and in terms of capex. Government recognizes that at this point of time, private sector is really not inclined to making investments, and therefore government will ensure that it creates that adequate balance that it needs to create at this point of time. So there will be a lot of planned expenditure, as I said, in the infrastructure and perhaps capital expenditure of other sorts. I also see a rationalization of tax rates. I mean, I recognize that thus far reduction in tax rates both in 97, 98 and once or twice after that has not resulted in commensurate increase in tax collections. But if one is to look at the way government is trying to formulate its strategy on attacking black money, I think one can safely believe that there will be an increase in threshold for the lower class, for the minimum tax payable. There will also perhaps be a simplification on tax brackets for individuals, perhaps maximum marginal tax rate of 30%, instead of 35, 36% effective rate today. One can hope for some reduction in corporate tax. Government will have to play, a balancing game between not disturbing fiscal prudence and providing tax concessions. But recognizing that both demonetization and GST after that is hopefully going to result in due course with significantly larger collection in taxes, government could perhaps prepone some of the tax concessions and start the process with the budget this year. So overall, I think there'll be decent and good news, in the budget, even if there are some populist measures.
Mr. Wadhwa, how do you see these drop in interest rates that we are seeing? Purely from a banking investor point of view, do you believe, some people are concerned that, is the onus of trying to restart lending once again being put back on the shoulders of banks, especially public sector banks? Questions like whether the rate cuts that we've seen, the sharp rate cuts in a very low credit demand environment, reflect that? Or is it purely a function of the MCLR formula and those things? Any thoughts there?
Well, I would say it's a combination. Clearly government is concerned about credit uptake and wishes to provide positive incentive for people to go out, borrow and start the investment cycle again. And to that extent, the public sector banks are facing a little extra burden. Having said that, we do know that public sector banks are flush with liquidity at this point of time. And I guess what the government is trying to say is try and pass on some of the benefit of that excess liquidity that you will continue to receive onto the borrower and kickstart the investment cycle or the positive sentiment. I would really worry about the NBFCs more than the banking sector, because the NBFCs will have to compete, particularly those that lend to the SMEs and also the housing sector. They will have to compete with the banks, and therefore they will be under pressure to reduce their lending rates to be competitive. And yet they don't have exactly the same flows that the banks have to be able to, on the liability side. So there will be a bit of a mismatch in that sense for the NBFC sector, and I would worry a little about them at this stage.
Okay, Mr. Wadhwa, before we let you go, I wanted your thoughts with regards to this CBDT clarification that came in on FIIs and indirect taxation on the 21st of December. Your sense in terms of whether that's actually going to impact FII flows to a larger extent, that, once they come back from holidays, they start looking at it more closely, they realize that there could be an element of double taxation, and hence there could be maybe some amount of pulling out of money from FIIs. Are you sensing that? Are you cautious about it?
First and foremost, I have a little sympathy for Mr. Jaitley, our finance minister, at this point of time. Vodafone has created such a negative perception and has really created such negative illusions that almost everything gets driven and connected with Vodafone. I'd like to believe, I haven't read the notification exactly, but I have read the commentary on that in the respective papers. I'd like to believe that it has never been their intention. It's not government's intention to try and attack FPIs and FIIs and bring in retroactive tax through this process of equating transfer of shares in Indian companies through funds with the Vodafone case. I also recognize that it's very natural for people to come to the same conclusion that if there is an underlying stock which is an Indian stock that's moving out, then clearly Vodafone would apply. I have no doubts that the government will provide a clarification on the subject sooner rather than later. So I have some sympathy, as I said, for Mr. Jaitley. I also have some sympathy for the FIIs who are reading, Vodafone into this. And I hope the government will provide the clarification. My own belief is that it is not the government's desire or intention to try and attack the transactions. I think Mr. Jaitley has on more than many occasions said that he is not going to support the concept of retroactive tax. Right. And I think it's time for us to believe in that. Let's wait and watch. Let's see what CBDT comes up with appropriate clarification. Hopefully the matter will get resolved at that end.
Mr. Wadhwa, thank you very much.